Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and mini futures, and today is a rollover date, so we're looking at the December contract already. One thing to remember when it comes to rollover days, that these days tend to be quite slow and choppy because there's not enough volume, because we are rolling over the contracts, but we are trading the December contract. This is the structure for today. Nice clean option working higher, and as a price action trader, of course, my goal is to identify a channel. So I'm going to take a look at the very beginning of this trend and connect the one swing, second swing, first two major swings, copy the trend channel line, and this gives me right now the bullish bias. So right now I'm not thinking about selling, I'm only thinking about buying, but I need to see nice correction to the key entry point. We actually have nice bounce off the key entry point, but it's only new high first entry long. Now if you can combine it with some triple test, multiple test, but this is not really a triple test, you know, this is not that close. It's mainly small consolidation here, for breakout, and also the downtrend is still in place. So we really need some second entry long, close outside, attempt to test the new low and key entry point holding. But you can see the strength of the key entry point, first entry long worked, great rejection, and market keeps going higher. So the trend is still intact, the trend is still in play. So I'm only thinking about buying, I'm not thinking about selling. I'm going to redraw the downtrend again because there are many corrections part of each big trend. Resetting the count, first entry long. So what I'm thinking about is a second entry long, second attempt at the EMA. We have a second entry long below EMA. You cannot go long above this bearish bar. Now you can use the secondary bar and go long here because the downtrend played with the break, push to new low. The uptrend is new high, and this is such a massive bullish bar that you can actually go long here because downtrend played out using the double bar entry technique, but there is no trigger. There is no break above this bar high, so the entry didn't really trigger, so you can't go long here, and there is no trigger here, so you need a hollow confirmation setup above the EMA. You have the hollow here, but problem is it broke back below EMA, which is not what you want to see. Also, we're going quite sideways, EMA is starting to flatten. Had this hollow form above EMA would have been great entry, but below EMA like this, not ideal. So the last chance is new low here, this is the lowest low of this correction, first entry short, pull back, second entry short failure. Can I get a failed second entry short before reaching new highs? I have failed second entry short now, but uptrend already played out with the break in new high, so I have to pause, looking to go long. So I cannot take a failed second entry short after uptrend played out, because now we can have a brand new market cycle. Okay, market is correcting, we're correcting, we're breaking lower. I'm going to redraw the downtrend, something like this. Alright, downtrend played out with the break, push to a new extreme. So right now, nothing much established. Price action is unclear. We're not reversing because we're going back above EMA and the downtrend played out. When I was watching this live, I also like playing some channel, secondary channel, something like this. The problem is this secondary channel wasn't really confirmed because you expect price action to go higher here, some strong push phase. It broke back down. You can see how uptrend break new high, another push to new high, two legs to new high. That can happen. So I was going back and forth whether this channel is valid or not. There is nice market geometry, but when you're drawing a secondary channel, this one, the steep one, is the first one, initial one, and this is the secondary one, okay, because it happened after breaking new high. So remember, the secondary channels are always weaker. You always prefer to follow the main channel, and the secondary channels always need more confirmation, more EMA rejections, stronger push phase, more high highs and high lows. All right, so we're just going sideways right now. Okay, nothing much happening. I cannot go short, I cannot go long. Okay, we're just going sideways here. You know, this is a decent setup. You have a new high, first entry long, second entry long. It's like a hollow confirmation setup. Problem is, it's below EMA. We're also going quite stacked. I'm going to mark it decent high low because it looks like you have a lot of higher lows. Price action is going to break higher. We're not going lower, but it's below EMA. Kind of just hanging here. Not the best trade. We draw the downtrend like this, and market reverse all the way back down. So nothing I can do, I just have to redraw the leg down. This basically negates that the secondary channel is valid. We're just going two sideways. So I'm just going to focus on the most recent structure. This downtrend needs to get new low. You have a break, push to new extreme. Okay. And now if I'm going to zoom out, I need to analyze the structure. What does this structure look like? Well, the downtrend already played out with the break new low, two legs down. We're going quite sideways, so it starts to resemble some consolidation. If I'm going to extend this key level, and I'm going to locate potential trend range, something like this, this doesn't look that bad. It looks like the trend range is about to be established, downtrend played out. But if I want to trust this trend range, I need to see push above EMA and preferably felt second entry short above the exponential moving average. And I have it, new low, first entry short, pull back, second entry short further. The sellers selling second entry short after downtrend played out with the breaking extreme below EMA. They got trapped. Also, if I'm going to connect the swings like this and draw a small trend line, the trend line is in play, and this is a great felt second entry short, felt second entry short. It started to form below EMA, but it managed to close strongly above. So this is what you want to see. Downtrend played out, great hypothesis setup. We have a brand new uptrend established. So when I'm watching this, I'm playing the trend range. I want to see second entry long at the EMA. But we strongly reverse down like this. This is not what I wanted to see, because I do expect new high for this channel. But market just suddenly continue working lower. Okay, creating additional push down. And now you have to ask yourself, do I draw another downtrend like this, or am I focusing on the trend range? Well, if I'm going to zoom out, I can see that it's simply two sideways. The entire structure, we're going two sideways. In fact, it looks like one leg down, break, second leg down, big two legs down, okay, inside the trend range. So it makes sense to focus more on the trend range structure, like we're going to go back into trend range. So if I want to go back into trend range, the setup I'm looking for is either high low above EMA or repeat pattern of this, the felt second entry short. So I'm going to redraw a brand new uptrend like this, because continuity rules, most breakouts will fail. You're going to buy low. These two legs down are so broad, it's negating any wider channel. And I actually have high low confirmation setup. I didn't take this setup because when I was watching this live, fortunately, I had different signal bar. I had a horrible bearish bar here. After I reloaded my data, there is decent bar like this. With this bar, you can actually consider going long here. Had I had this bar, I probably would have pulled the trigger. So I'm going to mark this high low because it's a doji, but it is a nice tail for these lows, so sufficient enough. Tiny risk, 1.5 points. You can use limit order. Strong push above EMA, two legs down. It ended up being a losing trade. And market continued to just go very sideways, very stacked. You can't basically touch this. This is no trade zone, horrible congestion. Okay, breaking new high here. Okay, this would actually be nice high-low confirmation setup. You have a new high, first entry long, pull back, second entry long, high-low confirmation setup. This would be a great entry to go long because the range is really holding. We're going sideways. Now the target is the range highs, okay, because you're back above EMA, but there was no trigger once again. There is no break above the signal bar, so you cannot go long, and market just continued to go higher into the close. So this is the overall structure for today. Super slow, super boring day, typical rollover day. Today, if you didn't take any setups, you basically didn't do nothing wrong, only a few good trades. I really like only this one. This felt like an entry short, and even this high low is quite tempting. This would have been a losing trade. It's a shame this high low right here didn't get a trigger, because now a brand new uptrend is starting, breaking new high, consolidation. You can see how we're going sideways, which is confirming that the buyers are in the market. They're not letting sellers to sell off. Push above EMA resumption, but there was no trigger and nothing much happening here. Also, you can consider perhaps this high low, had this high low closed strongly above EMA with nice full bullish body, you can go long there because the context was so clear. You just expect new high, downtrend played out, but the tail at the top making this more of a doji like body, not ideal. So not that many great trades, very slow and super boring day, but it's normal when the market is rolling over the contracts. It can happen like this because the volume is divided into two different contracts. But I hope you had a good trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck your trading.